Okay, we are here today with Coffee with the Coreys. It's Matthew and Chelsea Corey of the Corey team of Williams Carpenter Realtors. We're going to spitball a little bit like we do at home and in the office, unfortunately.
Scary.
Yeah, but you do exist.
I do exist.
You need to let people know that you do, in fact, exist. So, kind of catch everybody up on what's going on. We just got back from vacation. We've been super busy. We were actually busy while we were on vacation, filmed a little while we were on vacation, and the calls just kept coming in. In fact, even times when we were trying to go take the girls to do a little something.
Yes, the arcade.
We went the arcade.
On the beach.
Here
we are.
And it was a little colder than it should have been. We didn't quite get the break that we had hoped we would.
Yeah.
But so we want to talk a little bit today about lending, talk about getting started, the know before you go, talk about interest rates and what those are starting to do and kind of figure out where everything's going to fall. But I don't know.
Busy. We have a lot coming up.
A lot coming up. This week we have 5 listings.
Yep.
I think 2 have gone live. 1 goes live today.
Yeah.
In fact, I think that's all we're getting all that data put in.
Buyers.
True.
Who know that interest rates.
I
think they're getting better.
I think they're kind of improving, but
kind of.
I don't know much about the interest rate side as much. I try to stay out of the financing portion.
We don't like guessing.
It's not fun. Did
somebody say something about lending?
Well, yeah. I mean, while you're here, you'd like to speak about it.
Do you know anything?
Yeah.
I might know a little bit.
Okay. Do you want to sit down or you want to talk?
I can sit down.
Okay. So
and let's
no, this is
Lily wants to stay on camera.
This is great. She really is not a fan of filming, to be honest with you.
Want to be on camera still?
Hey, let's get you mic'd up, bro. Let's talk about this. Let's do
I'm the expert.
Well, you're better at it than I. So, while you're here, I don't know where you came from. I was kind of just
I was just wandering by and I thought, who?
What's going on over there?
I think I know those people.
What's going on over there?
Yeah.
Right? Yeah.
And then I heard the topic of lending come up. So
interest rates. Right? Let's talk interest rates. The forbidden fruit and what it likes to fluctuate and do nowadays.
Hold on a second. Let me grab my crystal ball down.
Yeah, please.
I'm going to rub it.
Yeah.
I mean, honestly, it's a question that a question that we obviously get all the time. What's going to happen with interest rates? What's the weather going to be tomorrow?
Well, I mean,
or actually, you know what? What's the weather going to be a month from now?
Oh, it's easy. It's guess. You guess.
Yeah. So, I mean, at the end of the day, we're very optimistic that interest rates are going to continue to come down. They've been, I hate to say they've been inflated, because I mean, I can tell you, my wife and I, we bought our first home in 2002. We built the home that we're in.
And you're
right
old.
now.
Dude, you're getting up there. Let's just be honest. Let's shoot that straight. Let's start there for sure.
Anyway, when we built our house in 2005, our interest rate was 6%.
Yeah.
So if you look at the historic mortgage interest rate chart over the last 5 years, it's not like we're sitting in uncharted territory. Now, obviously the cost of real estate has gone up significantly. I mean, when we had the record low interest rates a few years ago, that just super hyper demand.
I don't think that should have happened during COVID. Like as COVID progressed, that interest rate was so low. Like that's not attainable. I mean, that should not stay that way.
And they were historic lows, and the thing is I think they stayed low long enough that people felt like that was the norm.
Yeah.
And it really wasn't the norm. It was the exception to the rule. So now we would like to see them come down. I mean, obviously the combination of where interest rates are and what the price of real estate is now is kind of making a scenario where it's tough for folks, and any relief that we can get with interest rates is going to help significantly. And I think we'll continue to see it. I mean, at the end of the day, we had really bad inflation. The Fed wanted to cool the economy down. The two big things that the Fed are looking at are inflation and jobs. They want to see inflation get close to or get to that 2% target, but not at the sacrifice of jobs.
Tell me I'm wrong. There are folks that really need to sell or are really looking to upsize or downsize, and at this time they're fearful to do so because they're locked in on that low interest rate pre-COVID. And it's just a fact of not being knowledgeable of knowing what this this new norm, or what I think it should have been all along truly is.
And here's that's another question I get is, should I wait?
Mhm.
And I know people that have been waiting for 2 years for it.
Oh, I do too. I have that conversation every day.
But my response to that is, if I really feel like, and if you look at what the experts say, I really feel like if, let's say interest rates go to 5, those people that we're talking about that are sitting on the sidelines waiting to buy, it's going to bring a lot of buyers into the market.
Yeah.
Well, what happens when a lot of buyers come into the market? It drives up demand. What happens with prices?
Yeah.
So we could easily see, I mean, if let's say that interest rates went to 5 tomorrow, I could easily see interest rate, or not interest rates, but I could see the cost of housing jumping again. Now, I don't think it'll be as significant as we saw like around the COVID times, but I could see it going up. And
That pendulum swings.
Yes.
And we try to educate folks in that fact that if those interest rates do come down and that like demand for housing comes up so much, they're going to be in bidding wars again.
Yeah.
We're going to be fighting over seller concessions. We're going to be above asking price on offers again. That's when you're going to start to see these folks adjust their prices. It's going to increase tenfold.
Yeah. I mean, at the end of the day, economics 101, supply and demand, right? So the thing that I tell people is, we can fix an interest rate, right? I mean, let's say we're looking at a $200,000 house, and let's say the rates go to 5. That $200,000 house could become a $210,000 or $215,000 or a $220,000 house when demand goes up.
I agree.
If you buy that today at 200 and rates go to 5, we can fix that. We can fix the interest rate. I can't fix lost equity. So if you wait, and now you're buying that house at 210 or 220 or whatever, I can't get you that $20,000 back.
No.
Or that 15,000 or 10, whatever. So we can fix the rate
buy downs.
I can't fix the price.
Yeah, rate buy downs and all that. You're getting these 3-2-1 programs, and I just
there's a lot of stuff out there, and most of the time, a lot of the quirky stuff isn't necessarily a fit for a lot of folks. But
I just hate to see, we get all these seller concessions built in for a buyer, and then they use a good portion of that for the rate buy down. I just feel like that almost harmful, knowing that it may come down again in the near future. And then we're looking back going, my gosh, we used $2,000 of their seller concession credit for the buy down.
Yeah.
It
has to make sense. And that's something that we look at. We're not just, we're not just in the business of, hey, what's the lowest interest rate? It's got to make sense financially. So and in most, I mean, a buy down in most situations, a little bit of a buy down does make sense,
right?
But I mean, definitely something that we look at in conversations we have with our borrowers, and so they're making informed decisions. But at the end of the day, I mean, fingers crossed, we're hoping interest rates continue to go down.
So we talked about our tagline before was that know before you go. Go back to the part of getting that pre-qualification, know what different intervals happen, what your interest rates are going to look like, because creditworthiness oftentimes determines where your credit or where your interest rate's going to fall. Or, people need to understand that if it's a manufacturer stick-built home, your interest rate may be different. There's just different things you and I have discussed. We talk about routinely that know before you go. We're always going to try to hashtag that on this series. We're always going to try to hashtag that. It's one of those things that you need to have that information, be educated on that before we go out and start looking at places.
Yeah. Well, and I get a call, hey, what are interest rates today? Well, it's a loaded question.
You tell me that all the time.
I can't just, rates, whatever, right?
Yeah.
I mean, your credit score comes into play. How much money you're putting down comes into play. Is it a manufactured home or a stick-built home? So there are a lot of factors that go into it.
Oh yeah, I mean we're routinely trying to help buyers manage expectations and give them a realization of where things need to fall. Let them know that we'll try to educate them as much as we can. I think starting with the lender and knowing where everything's going to fall before we go out and start house hunting is utmost importance. We then get out, start showing these places. I mean, there's times, we may show 12 properties over the weekend to the same buyer, and there's 2 homes, but different outcomes of where things will fall with them depending on,
and there can be a big difference literally in a payment just based on where a home is.
Oh, 100%.
If in a lot of areas, if you're within city limits, you could have, virtually an identical home. And if that home is in city limits, the taxes might be $2,000. If it's in certain areas of the county, that same house, they may be $1,200.
We've run into issues with insurance premiums before.
Oh, insurance is definitely a wild card, right?
We've gotten almost to the finish line and ran into issues with insurance and trying to figure out what's going to work best for those folks. We try to have referral partners there as well that we can reference and try to have some options because we run into those issues.
I mean, I had one of those happen just within the last month where they got a quote. It was online. We got the closing scheduled and they contacted their insurer to get coverage put in place, and they found out they couldn't do it. Now, I mean, the good news is, yes, we have a lot of relationships. We were able to get those people hooked up with someone. They got them a quote the same day.
That is no different than the pre-qualification. Shop those things around and know where you're at before we get there. We don't want to be put into that position that deep into the game and know that we run into an insurance issue and then we can't buy the house.
Right.
We're so deep into that timeline. We've got money in inspections and a lot of time invested at that point.
Absolutely.
So-
Absolutely. But at the end of the day, I mean, I'll say, I mean, the activity since the beginning of the year, I mean, even when we got the, 1.5 foot of snow or whatever, the phones.
Snowmageddon.
Yeah.
The snow.
I
I want some sunshine.
don't want to hear sunshine. But
Dude.
You forgot you were just talking about being on vacation.
But
Right before I came on here.
yeah, you kind of kicked my wife out of her seat there. That was kind of rude. I'm just going to be honest.
I think she would argue.
No, she didn't want to be in it. I get it. No, she gets set beside me every day. She don't want to do it any longer than she has to.
Yeah. But no, the market's strong right now. And,
Yeah.
and honestly, we've
Increased
seen,
dramatically.
yeah. And I think a lot of it is for the people we were talking about earlier who were on the sidelines. I mean, you have people that have been sitting on the sidelines for a year.
It's not going to get better.
And
It's not going to. It's not going to get better.
Count on it. We're not going to. Unless something dramatic happens economically, I think it's going to be a relatively slow march down. And there are going to be some ups and downs.
I think I need
along the way.
to specify that it's not going to get better in the fact of if those rates do come down, then that buyer demand increases. It's going to be harder for them to battle for that home and get that home. They're not competing with 2 and 3 other buyers. But okay, let's wrap up. We got this down. Know before you go. Thank you for literally popping into this series. I did not expect that. Pretty wild, but we talked about some stuff, man.
And I don't
Left
think
you hanging on them
I don't
left.
think she's going to argue having getting out of the seat here.
Bro, you got a nut. If I'm throwing that up, you gotta close it out.
I won't leave you hanging.
There you go. All right. Well, thank you so much for watching Matthew and Chelsea of the Corey team. We are here with the Coffee with the Corey series, and thank you so much for popping in.
Here she comes.
Yep, there she is again. It's like the unicorn, like a Yeti. It's like seeing a Yeti.
She's a chupacabra.
You got the footage, but I think I saw it. I'm just not sure. But thanks for joining me, man. I appreciate it. Always appreciate our talks.
Thank you.
And hope to talk with you again soon. So
We'll make it happen.
all right. Thank you.
Thank you.
Thanks for watching.